All right, so welcome to Crypt Talk Podcast. And what I want to do on this one, let me just set up the video that you're about to see. I put together a collage of different clips from various interviews of CEO of Binance just to kind of illustrate a point. So when the FTX collapse happened and everyone started jumping on Sam Bankman-Fried, and no, I am not sticking up for him. What I merely stated on the Crypto Exchange Wars videos and other videos is that it's common practice for banks especially and centralized exchanges to use customer funds to hedge other investments. I'm not saying it's right. I'm not saying it's ethically or morally correct or even good business practice. I'm just saying that it's more common than most people would like to admit. And when you have a bunch of people dumping on FTX who probably indulge in the same practices, it's hypocrisy to say the least. And it's also creating an environment where the confidence of crypto is being diminished, even though fundamentally Bitcoin and cryptocurrency is not what exchanges are. In other words, fundamentally, cryptocurrencies, Bitcoin specifically, has not been altered. It's just the confidence that people have because most of the onboarding method that they're going to use is going to be a centralized exchange. So I'm going to play some videos. I'm going to kind of speak through it and give my opinion or highlight a few things as we do so. So here we go.
Sorry, you talked about AML and KYC. This has to do with trying to prevent money laundering and the like. As you know, there have been reports about investigations about money laundering through Binance related to Iran. Nira Rabini took to the stage where you are and made that comment. And just in the past day, I'm curious the state of that investigation and if you can speak to it.
Number one, that report written by Reuters.
Now, before we continue, I just want to just catch people up in case they're not aware. As I've reported before, Binance is under investigation for money laundering by allowing certain transactions to go through to unsavory people or countries that are under sanction.
Is wrong. It was fed to Reuters by a website called Currency.com. Currency.com used to be a Russian-owned website. I think FTX bought a part of the equity there.
So there he is, kind of throwing FTX under the bus again. Not really, not directly answering the question if he indeed did do what he allegedly is accused of doing.
We do believe that Currency.com gave Reuters that access to a platform that gave them some wrong data. We use all the industry common platforms like channel analysis, Elliptic, TRM for transaction monitoring. It's the same tools used by law enforcement. And we are very confident that our practices comply with the industry requirements. And the Reuters article is misleading. And Rubini, I would just say he tried to become famous by attacking everybody. That's all he does, and I don't think what he says carries much weight.
CZ, Sam Bankman-Fried has said that it was not a good strategic move on his part to get in this battle with you. He says he regrets it because obviously it helped reveal the issues with FTX that led to the collapse of all of this. Do you regret that feud?
We were never in a battle with him. He may think he's in a battle with us. We didn't even notice. We did hear some concerns about him bad mouthing us behind our backs in DC, in other political lobbying circles. We just said, look, we don't want to be entangled. We just want to exit our equity portion. We did that a year and a half ago. Right. And as part of that transaction, we got some FTT tokens. And recently, with the news of them becoming insolvent, carried by CoinDesk first, we just said, well, we want to sell those tokens. That's all we did.
So that's interesting because what happened there is, yes, they were doing business together. Sam Bankman-Fried, I guess, sold him quite a large sum of tokens or gave him some as part of the business transaction. And then when everything hit the fan, which was pretty much prompted by CZ, let's keep it real, what CZ did is he dumped all those tokens, the FTX tokens, which crashed the value of the FTX tokens, made people lose confidence in FTX as a whole. And then they start scrambling to take the money out. And then he tweets out a little something that puts more gas on the fire. And the next thing you know, people are scrambling and there's not enough liquidity because Sam Bankman-Fried probably did take some of the liquidity out in order to have hedge other investments, which, like I said before, it's not something unique that's done. So, like, this was calculated, right? And that's my real point. My point is, yeah, there were some shady things going on across the board, and it just so happened this guy got his hand caught in a cookie jar for doing. And the reason why CZ was able to do this with the perfect timing is because I'm pretty sure, and as you'll see, you can make up your own mind later on, that this is something that I'm pretty sure he engages in as well.
We were never against them. We were never. We don't focus on other smaller exchanges. Focusing our energy there doesn't give us the best return. If we take customers away from them, we may grow by 1 or 0.1%. Whereas if we can help grow the industry, we can grow by 5x, 10x, 100x. So we are much more focused on how to grow the industry more healthily together with other exchanges. So we never view them as a competition or as a fight. He may have that in his head, but we were never focused on it.
So that was a good recovery right there. Saying that they focus on the overall growth of the industry. That's actually a good answer. A little misleading because if you're doing business with them, then obviously you are focused to some degree on them, because you're not doing business with someone who you just think is insignificant.
So the idea that so many issues about trust and credibility and integrity in this space, and I want to talk about FTX in a moment, but I want to start with what's happening at your own firm, given the outflows this week. I saw that you said on an AMA, this is one of these Ask Me Anythings, you said there's no amount of withdrawals that would put us under any pressure. But that, I think, is a very bold statement to be making. How are people and why should people trust that their money is safe at this point?
So I think thanks, Andrew, for having me. And the well-run crypto exchanges should hold user assets one-to-one. So user deposit Bitcoin, we hold it in Bitcoin, we move to a cold wallet, we keep some in the hot wallet. And people, they sell it, now the Bitcoin belongs to somebody else, but we still hold it in the cold storage. People can withdraw 100% of the assets they have on Binance. We will not have an issue in any given day. So 100% of the users withdraw 100% of the assets, we'll be fine. This is very different for traditional financial people to understand, because banks run on fractional reserves.
Now what he's saying there, and he didn't really directly answer the question. He just said how a good crypto exchange should run. He didn't really say, hey, saying it was kind of slippery, right? But what he said about the fractional reserve practices that bank uses is very correct. And what that means is, like I've said before, the money is not in the bank, right? Like if everybody went to take the money out the bank, it's not there because they are able to operate with a fraction. They're able to actually do business 10 times what they're actually holding. So if a bank is holding $1 billion, they're actually able to loan up to $10 billion, even though they don't have that $1 billion, right? So that's basically what he's alluding to right there. They don't actually have one-to-one the funds. If everybody went to the bank to withdraw their money, it's not there. That's just what it is. It's actually not there. So what they do is collectively they pull all of our money together, then they loan out 10 times that amount for high interest while they're paying you 0.25% to hold your money in that bank that they're using to loan out to make a lot more money. This is why DeFi is so important, because now you could be the bank loaning out your money at a percentage that's much higher than you're going to yield holding it in a traditional bank. This is why DeFi is so important, because when you understand fractional reserve banking and the concept of collateral debt positions or whatnot, that's how it becomes beneficial, and you can scale it down to whatever you have. That's what's so awesome about DeFi. So he has a point with that, but right now the scrutiny is, do you really have what you say you have when you're not really showing accurate records, and when you had to shut down for hours because you didn't have the liquidity in a particular coin to do swaps.
Regulators, many of them may think that it's okay for crypto businesses to be running on fractional reserves. That is not okay. In crypto, there's no central bank printing money to bail out banks when there's a liquidity crunch. So crypto businesses have to hold user assets one-to-one, and that's what we do. It's very simple.
Okay, but let me ask you about that specifically, and I don't want to get too technical, but indulge me for a moment. When you had what seemed to be liquidity issues around customers wanting USDC, it looked, at least from this vantage point, that what was happening here could have been avoided if, and tell me if I'm wrong about this, you allowed customers to deposit and hold USDC instead of what it looked like was that you auto-converted them into your own exchange dollar. Am I wrong?
There's a minor corrections. So number one is we do the auto conversion into BUSD, which is not issued by us.
So he's talking about the Binance stablecoin, the BUSD, which is a stablecoin, which he's saying is issued by another entity, so it's not really their coin per se, right? But the bottom line is this: if the liquidity was truly there, well, I'll let him finish before.
Which is not the exchange dollar. It's actually issued by a New York DYF licensed entity, Paxos. So the reserves are in New York. It's a stable coin. The problem we had before is we have many different types of stable coins on Binance. And Bitcoin trades against USDC, Bitcoin trades against BUSD and the USDT. There's TUSD, there's a bunch of other things. And then it's very difficult for users to find the best price. So we said, okay, they're all stable coins and they should convert one-to-one. So let's combine all of them into one so that the users just they want to buy Bitcoin, they go to Bitcoin BUSD and they find it. On the deposit and withdrawal, we do the conversion. We have channels to convert them one-to-one. But the channels we have actually have to go through a bank because to convert from BUSD to USDC, we have to sell BUSD into US dollars, cash in a bank, move it to a different bank account, and then buy USDC at a different institution. So that day, we had more users trying to buy or trying to deposit BUSD and withdrawing USDC. And we ran out of that. And the bank that does the conversion doesn't open until 6 hours later. And that's a bank in New York. So we were actually blocked. This issue was actually caused by a bank. So that's and stablecoin is the only one we convert. Every other asset, people deposit Bitcoin, we hold Bitcoin. People deposit Ethereum, we hold Ethereum.
Right. And you understand why I'm asking that question, because it does appear in that instance, at least, that when you said no amount of withdrawals would put you under pressure, by default, it put you under pressure. Now, whether it was your doing or some other bank's doing. And so the question is, longer term, would you reevaluate how you do that?
So we have the assets to convert.
See, he's not really just taking accountability by saying, hey, you're right, we should have had more reserves in that particular coin, therefore we could have executed the trades without having to shut down. So he's kind of slippery, kind of deceptive, and he's going to get more deceptive as this video goes on. And my only point of this, I know a lot of people from Binance, especially on Reddit, they're going to try to come after me as I'm trying to do a hit piece on Binance. I'm not. First of all, first things first, one thing that I said plenty of times since the beginning is not your keys, not your crypto. Don't hold your crypto on exchanges. Hold it in your own self-custody wallet, period. Buy it from exchanges if you need to trade because it's quicker and cheaper and easier to do so on an exchange, by all means. But to hold the vast majority of your coins on an exchange is going to be problematic, especially if they're not FDIC insured and if they have liquidity issues and go insolvent like FTX did. That can only happen if you're holding. And the same thing can happen with a bank, right? A bank could get hacked and you could lose your money. The thing is, they're insured, so they'll replace it. Crypto exchanges get hacked, or they could just restrict access to your coins. They can restrict access to certain transactions. This is why it's important to understand how to use DeFi protocols on your own and have more sovereignty over your holdings.
There's no margin, no leverage. We just needed the bank to open. So the bank opened 6 hours later. It was fine.
And that's my point there. See, the principle of crypto is to not have to rely on a bank in the first place. So if his exchange is dependent on a bank's operations in order for you to be able to make your transactions, then what is the true purpose of the exchange except for just to be a bank? So in other words, you don't really have access and sovereignty over your money when it's in an exchange. It's no different than a bank. If the exchange itself is waiting on the bank, that means they don't really actually have the reserves necessary, right? And it means that you're subject to the same problems or challenges as you would with a bank. So in this case, it's not crypto's not solving the problem, it's just the bank or the exchange isn't solving the problem as a bank, because they're only mimicking what banks do and dependent upon banks to some degree.
Banks don't work for 24 hours a day. Banks only work for like a few hours a day. And when you try to, and when banks are shut down, when banks are closed, you try to withdraw money, it doesn't work. That's exactly the same situation that happened. And we allowed people to withdraw other stable coins onto other platforms to do conversion if they want. So there was not a liquidity issue. It was just, there was a conversion issue that was going through the bank.
In terms of the credibility of Binance, you disclosed that Binance holds about $60 billion of crypto assets. But thus far, you haven't disclosed your liabilities. And I wonder why that is and whether you will.
So that goes back to a video that I did before when I showed you the tweet that he sent out, and all these different exchanges after FTX collapsed started showing their reserves, start showing their quote unquote audits, trying to assure the public that unlike FTX, hey, don't worry, we have the liquidity, we have the reserves, we have the money to operate. We're not, you know what I mean? We have the 1-to-1 ratio or whatnot, as they all dumped on FTX. But what that did is just added more scrutiny to the game. Like, I think they would have been better off just being quiet about it, really. Because now when they're going out of their way to dump on another exchange, right? So altogether, in general, is creating, the situation just creating lack of trust in crypto and specifically exchanges. And this is why people are starting to take their money off exchanges more. And this is why Binance have been seeing a lot of withdrawals lately, and their coin is starting to dwindle in value, right?
So we are working with firms to do the audit of financials, liabilities, etc.
So
very simply.
So that's interesting, because he said he's working with these auditors to, investigate and work out the liabilities, but he just said he didn't have any liabilities. He's not really being forthcoming, and he's being kind of slippery, is my point. So are they in as much trouble as FTX? Were they operating in some degree in the same capacity as the FTX? Look, I'm quite sure most of these exchanges, yes, if they have 3 billion, let's say, on their exchange collectively, they know not everyone's going to take it out at the same time. So they may take 500 million, do a couple things on the side, make some money, then put it back. But if they get caught while that money is out and too many people are trying to cash out, then it causes a problem. And that's pretty much what happened with FTX.
Does not owe people money. Binance does not have loans from other companies, from other funds. We just don't have it. You can ask any fund in the ecosystem. You can ask any VC. We actually also do not have VC investments, so we don't owe anybody any money, and we also do not have loans to other people that we depend on for our next payroll.
So he's saying he's not saying that they don't have loans to people. He's saying that we don't depend on those loans coming back to make their payroll, which is a very interesting way of stating that. However, it indicates that he does have. And what money is he using to loan out to do these type of things? Is he using the customer's money? Is he using those of us who have money on Binance to loan out to other people, or leverage that for other moves that he's making? In likeliness, where else would the money be coming from, right?
We are very simple, very self-contained type of organization, and we manage our cash very simply. So that's very, very different from the FTX situation, where so people who are hurt by FTX are not worried about everybody else, and they
see notice this. Bad guys, those are the scums over there. We're doing our thing different. We're not like them, even though we did business with them, right? We're not like them. We're different, even though we're not going to really show you an audit, because we haven't really even actually had an audit. We've just reported our assets. But we'll get into that a little bit later.
Were defending FTX before, but that's why they have money on FTX. So, but just because they're bitten by one snake doesn't mean that every other animal is the same.
Man, that was he almost did a Freudian slip there. He said just because you're bitten by one snake don't mean that you're gonna be bitten by this snake. You know what I mean? It's just kind of funny, though.
For the video.
Let me ask you directly. You were an investor in FTX, and I know you've spoken frequently with Sam Bankman-Fried over an extended period of time. Why do you believe FTX failed?
I have an opinion. I don't have the records. Here it is. After my accounts were stripped of all of their assets and all of the accounting and trade information, I couldn't get answers from any of the executives in the firm, so I simply called Sam Bankman-Fried and said, "Where is the money, Sam?" He said he had been refused access to the servers. He no longer knew. I said, "Okay, let's step back. This is a simple case in my mind of where did the money go?" And I said, "Sam, walk me back 24 months. Tell me the use of proceeds of the assets of your company. Where did you spend it?" And then he told me about a transaction that occurred over the last 24 months, the repurchase of his shares from Binance, his competitor. I didn't know this at the time, but at some point, CZ or Binance, who runs Binance, purchased 20% ownership in Sam Bankman-Fried's firm for seed stock. And then, over time, and I asked him, what would compel you to spend $2 billion was the number he was giving me at that time. Later, in a subsequent conversation, about 24 hours later, he told me it could have been as much as $3 billion to buy back the shares from CZ. I asked him, what would compel you to do that? Why wouldn't you keep your assets on your balance sheet? And why would you offer this to just one shareholder? He said, because every time we went to get licensed in different jurisdictions, because you must understand the prize of crypto is to get regulated. For all the talk we say about Bitcoin and everything else, no institutions own this. I work for the sovereign wealth and pension plans. They don't touch this stuff because it's unregulated. Between these two, let's call them frenemies, because they obviously were potentially the two largest shareholders in the firm, they had a disagreement. They had a falling apart. Apparently, according to Sam Bankman-Fried, CZ would not comply with the regulators' request in these different geographies, these different jurisdictions, to provide the data that would clear them for a license.
So right there kind of shows you the leverage that CZ was holding over FTX purposefully, not allowing them to get the proper clearance in certain jurisdictions because, of course, that would be a competitor. So he bought a percentage of FTX in order to keep FTX from growing because he knew that he would have to clear them to be the ability to be regulated and accredited in certain markets. So when he says he doesn't really pay attention, he definitely pays attention. Like when I said that, yes, and he threw some gasoline on the fire and actually helped start the fire, that's what I mean. That's exactly what I mean. Like he was doing certain things, and this is going to go on. Like, remember, this is a new budding industry that's now trying to be regulated and on the status of a financial institution, right? They want to be in that realm for the next financial sector that is coming into play. So there's going to be infighting until they learn how to collectively work together to benefit the whole of the industry.
Withheld it, according to Sam Bankman-Fried. The only option the management and Sam Bankman-Fried had was to buy him out at an extraordinary valuation of close to $32 billion, less apparently a 15% discount. That stripped the balance sheet of assets. You ask me why it went bankrupt? Go to the last week.
Now, to be fair, this person is heavily invested in FTX, friends with Sam Bankman-Fried, so he's going to align himself more on that side to a certain degree. He's going to be a little bit biased to a certain degree, but if what he says is true, it sheds a lot of light on the full picture, because right now the picture is looking like, oh, it's just FTX. They're the lone ranger in doing all this chicanery, but they're not. You know what I'm saying? This is why I said like all these exchanges, like you should only have a certain amount of trust in them as far as like keeping your assets there. This is why I say, don't keep your assets on exchanges unless you intend to sell soon or unless you're just doing it for quick and easy trades, but it'd be better off if you know how to trade with some of these self-custody wallets that are attached to decentralized exchanges. And when you learn how to use decentralized exchanges, self-custody wallets, DeFi protocols, then you don't have to worry about the same kind of things that you do dealing with these centralized exchanges.
All of a sudden, in social media, CZ is asking for another $500 million. He wants to do a block trade of FTT, or the proprietary token of FTX, wants it converted back to fiat. Why would you put that out there? You know it's going to push down the pressure, it's going to push down the value of that coin dramatically, and that's exactly what happened. Every trader knows that if you have a large block trade, you go negotiate a clearing price with other buyers and you do the transaction. In my view, my personal opinion, these two behemoths that own the unregulated market together and grew these incredible businesses in terms of growth were at war with each other. And one put the other out of business intentionally. Now, maybe there's nothing wrong with that. Maybe there's nothing wrong with love and war. But Binance is a massive, unregulated global monopoly now.
We want to be transparent. We want to set the golden standard for reliability, solidness in this space.
So do it. Would you be able to handle it if somebody asked you for $2.1 billion back? Would that be okay? Would you be able to still withstand things?
We're financially okay.
Including you have $2.1 billion to give away. If somebody came to claw that back, you'd still be fine?
We'll let the lawyers handle it.
Yeah, he said we'll let the lawyers handle it. So he's not really being forthcoming. And my point is this. So a lot of stuff that I said already before, and I implied pretty much what you're seeing now when this story first broke. It's now being confirmed by people closer to the situation and by the actual CEO of Binance, which now he's coming with kind of shifty answers or non-answers. And my point is just that, look, this is what it is. Like these businesses operate the same. These banks have been operating in the same capacity. These exchanges are basically just banks for crypto. Like you're not really you don't really have unadulterated access to your crypto once it's on exchange. You just don't. You don't have the seed phrase. So you don't actually have the crypto. They're holding it on your behalf. They actually have interest in you selling low and buying high. This is why a lot of these exchanges, even Coinbase, when Bitcoin is really just popping, they make it difficult for you to sell on their platform. That's when the servers just happen to go awry. I've had the same kind of situation on Coinbase plenty of times when I'm enjoying a pump that's a coin that's up 300% for the day. And then I'm trying to exchange it or get it out of there. And all of a sudden I'm getting these error messages and blah, 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 blah. This was back when they would tell you ahead of time that they're going to list a particular coin. So now that way I'd be ready to trade for that coin. And then after a few hours, that coin would be up several 100%. And now I'm trying to trade it back to a different coin to get it out of there. And I would get all these error messages or the servers would be shut down. This happens all the time. Because remember, if they actually own the crypto, they don't want you to take it off the exchange at a high price. They don't want you to sell it back to them at a high price because they're going to lose money, right? See, that's the difference between if you're dealing with a decentralized exchange or a wallet that's connected to a decentralized exchange, because it's just a smart contract. There's no one that stands to gain or lose from your transaction. It's just code performing a transaction due to the command that you put in the smart contract, which is you pressing the button saying that you want to trade this for that. That's different than when someone actually has an interest of biasness because, them accepting your coin at the higher price is a direct conflict to their business model, right?
We are financially strong.
But thus far, you haven't disclosed your liabilities. And I wonder why that is and whether you will.
Yeah, so we are working with firms to do the audit financials, liabilities, but audits don't reveal every problem. So
No, but an
there are
audit
many
from a
audit
Big
firms
Four
that are
auditor
kind of-
would reveal that, CZ. If you could
Right.
get a Big Four auditor to say that, if you're saying that some of them don't want to work with you, that raises questions too. They don't want to work with you because you don't have the files and the data that would make them feel comfortable signing off and giving that stamp of approval?
Actually, many of them don't even know how to audit crypto exchanges.
So what he's saying is that he can't actually have a proper audit done because there's no auditing company that knows how to deal with crypto exchanges. And this is why he doesn't show his liabilities as well. I mean, it's just kind of getting weird. Like, he showed the assets, so therefore he could try to make people believe that they're on the up and up. He didn't show the liabilities, which was pointed out by another exchange. This is why I say these exchanges are going at each other. They're throwing shade on each other. They're trying to prop themselves up as being the one that's clean and on the up, and everyone else is doing shady business. So they're actually just pointing fingers at each other, and it's justified. It's not even like all of it is it's not true. It is true. It's just tactic though, right? Because a lot of them do the exact same practices. So that's how they know with precision exactly how to pinpoint what someone is doing that is not on the up and up. So yeah, he's saying he can't get it audited, but let's hear what else comes
They don't really when they audit, they're very used to auditing a firm.
Does
No
Coinbase,
banks
CZ,
give
Coinbase has a
100%
Big
proof of
Four.
reserves.
Coinbase has a Big Four auditor.
So the Big Four auditor is one of the four auditors that are accredited and known across financial industry. So now what this guy is saying is, hey, well, you're saying that there's no auditor that can audit crypto exchanges, but Coinbase uses one of the Big Four auditors. So how come if none of them know how to audit exchanges, why is Coinbase using a Big Four accredited auditor? And you're saying that you can't listen to the answer.
Actually, I don't look at Coinbase. We don't really look at
I think
other,
so, though.
I don't know the
so
details.
they understand it well
Deloitte
enough.
is the auditor for
Yeah.
Coinbase.
Yeah. So basically they just called him out, you know. And now let's be fair. Our traditional finances, traditional markets, looking to undermine crypto, yes. Are they berating this dude on behalf of traditional banks? Yes. But do they have a point? Yes. So he's saying that, hey, we can't get it audited. It's not because of us, because they don't know how to audit. So he's like, so they're like, hey, well, Coinbase, they're audited. You know what I'm saying? They have a Big Four audit. What are you talking about? Then all of a sudden, oh, I don't know. We don't know about what Coinbase. No, you know. Like you absolutely know. And ironically, CZ tried to throw shade on Coinbase, questioning if Coinbase actually had the reserves. He did so in a tweet that he quickly deleted. So, like, you know, it's just kind of it's kind of getting shady out here in the crypto exchange world. This is why I made the video Crypto Exchange Wars, just to kind of highlight how they're kind of going at each other, how they're kind of instead of banding together, you know, because every exchange want to be that one exchange, right? They want to be the go-to, as they know that the market is going to triple, quadruple, and 10x as far as adoption is concerned. Right now, if there's only 2% penetration, they know that 2% is going to go to 4%, it's going to go to 10%, it's going to go to 20% within the next 5 to 10 years. So they want to set themselves up as the go-to exchange, not just for retail investors, but also for venture capitalists and institutional investments. So they're trying to set themselves up in that position and to be the sole controller or have the monopoly on the situation. So they're not really banding together and working collectively. They're kind of cutting each other's throat so they can fight for that top spot. But by doing so, they're making the whole industry lose confidence, or people lose confidence in the whole industry, and bringing more scrutiny, which is going to bring more regulations. In part, we probably need that, but it's also going to keep the prices down. So what we're going to be seeing happen is what we've been seeing happening, right? As these wars go on that continue to make the prices stay stagnant, you see more and more institutional investments. You're seeing banks acquire more. You're seeing Wells acquire more. And what they're going to do is they're going to top heavy on the crypto even more so than they already are. Then they're going to offer it back to you in different ETFs. Now, when these ETFs and these different bank derivatives of crypto come out, They're going to be touted as safe and regulated because, hey, you can trust your bank. Now you could get your Ethereum from the bank. No, you won't really own the Ethereum, but hey, at least you won't have to worry about the shenanigans of these shady exchanges. And my point is, what they're going to do, what they always do, they're going to over leverage their holding. So like when they're holding all the crypto and they're issuing out IOUs, essentially, they're not going to actually have the crypto to be able to back all the money that they have collected. In other words, if they buy $100 million worth of Bitcoin, that doesn't mean they're not going to collect $500 million worth of orders. So when they do so, are they going to buy another $400 million worth of Bitcoin, or are they just going to hope that not everybody wants to cash out at the same time? I'm saying that they're going to do the latter. That is how they're going to pretty much counterfeit Bitcoin. And then you're only going to be able to do your transactions during certain business hours for higher fees, and you'll never actually own the Bitcoin. They will. So the same way that they monopolize and manipulate traditional finances, they're going to usurp, they're looking to usurp and do the same with crypto, which is going to make your true ownership of crypto off of exchanges into your own wallets with seed phrases that much more necessary. It's going to make your ability to maneuver on decentralized protocols that much more important.
It led to the disclosure that there had been money that was taken, but that disclosure raises lots of questions about firms like yours. Have you done the same? Has there ever been commingled funds? Have you ever taken any of the clients' funds and done anything with them? And again, why should we believe you? Because Sam Bankman-Fried told everybody, no, that hasn't happened. And he tweeted a lot of the same stuff that you've been tweeting.
So what she just asked is something that I said. I've even said on this video, but I've said it in past videos for the last few weeks now. I say that, yes, you can bet that most of these exchanges operate the same way. They're taking the collective money that people are putting on these exchanges, diverting some of them to other investments, bringing it back, making their money and bringing it back. Now that becomes harder when the market is stagnant like it is now. It becomes harder to do so, but it becomes maybe even more important to do so because they're not making as much money on transaction fees because people aren't doing as many transactions. So yeah, they're going to take some of the pool that we're holding on the exchanges to make other investments to stay in business, and then they'll bring it back, less the profit. Listen, banks do this all the time. That's how they stay in business, actually. They loan out collectively our money. That's in part how banks make money. They loan it out. What kind of loans do they use? Oh, car loans, house loans, business loans, school loans. So they take the collective money that we have in their banks, loan it out, and then they times it by 10 because it's fractional reserve banking, meaning that they only have to have a fraction of the reserves, right? So then they leverage that into high interest yielding loans to make money off of while they're giving you 0.25%. This is why DeFi is important, because you can do that yourself and get 6, 7, 8%. You can stake for 5, 10, 20% depending on the coin in the market. And it's guaranteed because you have to have collateral to borrow on these DeFi protocols. So in other words, in order to borrow, you have to put up collateral. Therefore, the lender is guaranteed to get their money. And as the borrower, you're borrowing against your own money, so you don't have a timeline of paying it back as long as the leverage. So if you're borrowing 80% of what you just put up as collateral, as long as the percentage of the loan doesn't eat up that other 20% cushion, you're good. And if it gets too close to eating up that 20% cushion, which will be years, will take years to do, depending on the percentage that you're borrowing it at, which is typically going to be like between 1 and 3%. So it will take years. So you have that much time to pay it back. You can pay it back in installments. You can pay it back all at once. However you want to do it. But if it gets too close to capping that cushion, what it's going to do is going to execute an automatic liquidation and give you the change. So it's guaranteed. This is the beauty of DeFi, as used by reputable DeFi protocols. And in my opinion, there's only 2 that I would consider, and 2 that I've used. I wouldn't use any of these new ones. I personally deal with Compound and or what's the other one? Maker. Yeah.
days, which I think gets
Okay.
back to this idea of show me the money.
Yeah, so let's get back to show me the money part. So Calvin omitted the fact that there's no records. That's not a problem.
So
Funds, have you ever
check this out.
taken
So he's not going to answer the question, by the way. I just want to highlight that before we get out of here.
any of the client's funds and done anything with them? And again, why should we believe you? Because Sam Bankman-Fried told everybody, no, that hasn't happened. And he tweeted a lot of the same stuff that you've been tweeting in recent days, which I think gets
Okay.
back to this idea of show me the money.
Yeah, so let's get back to show me the money part.
See, the answer right there should have been no. It should have been a hard no. We don't use any of customer funds to make other business investments. That should have been the easy answer. He couldn't give that answer. So like I said before, the reason why is because all of these exchanges, banks, large corporations, they operate the same. They do the same thing. It's not unique just to FTX, is my point. I'm not sticking up for FTX. Even though I did use FTX, I liked FTX. It was easy to use. I liked it. And I haven't really used Binance because Binance I wasn't able to use in the state that I moved from. And then when they opened up Binance US, I was just happy with the exchanges I used because I only use exchanges for particular specific reasons, which isn't as necessary because I know how to deal with decentralized protocols. So I don't really have to purchase crypto from a centralized exchange. I don't have to exchange on a centralized exchange, even though at sometimes I have done that. And since I know how to liquidate or take money off from cryptos without having to sell it, and create a tax event, my use for exchanges is kind of like my use for banks. It's just minimal, really. I mean, actually, I have more of a use for a bank than an exchange, a centralized exchange at this point. So, I just kind of wanted to show you guys that. I know it's a long video, so if you've been watching this long, you might as well like, comment, share, all that good stuff. And I just kind of wanted to bring light to something and just kind of highlight what confirms what I've said before and why it's important for you to understand and know how to operate without using centralized exchanges. Binance could be the next one to fall. There will be another exchange that's going to fall. I guarantee you that within the next year. There'll be another exchange or two, big ones, that will come under some type of problems that may lead to their collapse as well. FTX is not a unicorn in this situation. Anyway, thanks for watching, you guys. Enjoy your day. Peace.